Good morning, traders, and welcome to the daily call. Today, Friday, the 27th of January. Please excuse my voice today. I think I've caught a little bit of a cold yesterday on Australia Day. But before we do get started, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. All right, so let us have a look what happened overnight. Essentially, we had the Spanish unemployment rate come in at 18.6, a little bit better than the forecast. So that is generally good for the euro. We also had, let me go back. We also had the Eurogroup meetings. And the main discussion points from this was that Greece has pretty much got about less than a month to iron out its disagreements with its creditors over how to move forward with that rescue package which has been keeping the country afloat since 2010. So that was the highlight, and consequently the euro did take a bit of a hit yesterday, but so did most currencies against the US dollar. So that's what happened yesterday. If we're looking forward at the sterling in London, we had the GDP number coming at 0.6, and essentially that's an increase which is at the same rate of growth as the previous 2 quarters. So the GBP held its ground more so against the US dollar and had a nice trading day yesterday as it's consolidating post Brexit and the UK ruling news that happened earlier in the week. Moving along to the USA, we had unemployment claims at 259 and new sales at 536. Now, despite mixed data, because the data really wasn't great, it seems that the dollar bulls are back in control as the US dollar took control pretty much against most major currencies, and it seems to be taking its cues from the equities market at the moment. So it had a very, very strong day as we saw the US yen come within a whisker of that 115 handle. Okay, so let us move forward and let's have a look at what our chart of the day is for today. Now, today I found this an interesting one. I'm looking at the New Zealand US dollar. And what I found for us, you can see it's a perfect triple touch. Okay, it's one of the strategies that we've learned over the past months, and we can see that we are right now at a critical point, and we've seen in the past that this resistance line has acted as resistance and the market's bounced off it. So the question mark remains, will it happen again? So let me just zoom in a little bit closer so we can take a closer look. And as I look at the critical area of this chart, we can see that what I've highlighted for us is two candles, and we can see that this particular candle over here is an engulfing candle. It is engulfing the one prior to it. So basically what that means, at the open of the next candle, your queue is set and ready to take a short trade on it. Now, at the time of me screenshotting this, the new candle had not started, but I believe it has started now. So this one is ready to go. So if you see it and you like the trade, by all means, feel free to take it. All right, so that was our chart of the day today. It's the Kiwi US dollar. So what's happening in the last session of the trading week? We have today at 10:30, we have from Tokyo the CPI number. Any yen traders, look out for that one. There's still the ECOFIN meetings are still progressing. They're all day tentatively, so the euro will react as certain things come out of those meetings. Later this evening at 12:30 midnight, we have from the US a whole bunch of data. We have the GDP, the durable goods, and the index, the price index. So all that this evening at 12:30 for the last session of the trading week. And at 2 a.m. we have the revised sentiment number from the US. So that's pretty much all that wraps up the trading week for us. As always, please feel free to contact us if you have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. But most importantly, have a great trading day. Have a fantastic weekend, and I'll see you next week for the daily call and our market analysis. Bye for now.